Welcome to the Deep Dive. Today we're asking a pretty fundamental question. What really counts as wealth or property? I mean, beyond the obvious stuff like cash or a house.
Especially in today's world, right? With complex finance, digital assets.
Exactly. And how do established frameworks like Shari'ah grapple with things like the value of an idea or a brand name?
Well, that's precisely what we're digging into. We're focusing on Sharia standard number 42, financial rights and their disposal.
Okay, standard number 42. And this isn't just source. Our mission then, for you listening, is to really get under the hood of financial rights in Sharia. What are they? What different kinds exist?
And importantly, how does this framework actually regulate them, protect them? It's relevant for everyone, really. Individuals, big institutions.
Definitely. And just to be clear, we are keeping the focus tight on financial rights today. We won't get sidetracked by other things like, say, certain options or endowments. Strictly financial rights and their value.
Sounds good. So, where do we start? The definition, I suppose.
Yeah, let's unpack that, the absolute core. How does Sharia actually define a financial right?
Okay. At its heart, it's described as a privilege or maybe a specialized authority, something Sharia grants to a person.
And person here means?
It can be an individual, like you or me,
Yeah.
or it could be a legal entity, a company, an organization, that sort of thing.
Right. But what's the absolute must-have characteristic?
It must have monetary value. That's the crucial part.
Monetary value. So you can put a price on it.
Exactly. It has to be something appraisable in money, something that can be legitimately part of exchanges and transactions, buying, selling, leasing it out.
If it can be part of that kind of economic activity, it counts.
That monetary value is the non-negotiable bit. It gives it recognition within the system.
Okay, that makes sense for, say, a physical object. But you mentioned categorizing rights. How does Sharia split these up? Is it different from maybe other legal systems?
That's a great question. Yes, there are different ways to classify them, but a really fundamental distinction is made between personal rights and real rights.
Personal versus real rights.
Okay, the real right is known as haq al-aini.
Haq al-aini. And the difference is?
Okay, so a personal right is basically an obligation, something owed by one person to another. Like if someone owes you money, you have a personal right against them, a claim on their liability.
Right, a debt someone owes me.
Exactly. Now, a real right, haq al-aini, that gives you direct authority over a specific tangible thing.
Tangible, like
your ownership of an apartment or your car. And here's the key difference. It's not just academic.
Okay.
With a personal right, if the person defaults, your claim is against them. With a real right, your claim follows the asset, the actual thing.
Oh, so even if they sell the car, my right might still attach to the car itself.
Precisely. Regardless of who currently possesses it, this makes it, in many ways, a stronger right, especially in situations like bankruptcy. It's tied to the thing, not just the person's promise.
I see. That's a powerful distinction. The claim follows the asset. Okay, but what about, well, the modern stuff? So much value today isn't tangible.
Right, the modern twist.
Yeah, intangible rights, things you can't physically touch. How does this framework handle those?
This is where I think it gets really fascinating. It shows the adaptability here. We're talking about things like trade names, trademarks, patents.
Intellectual property generally? Exactly.
IP rights. These things have immense monetary value in today's economy, right?
Absolutely huge.
Yeah.
A big brand name is worth billions, but it's not a physical object. So what's the stance? Especially since these concepts are much newer than the foundational texts.
Well, Islamic jurisprudence fully recognizes and protects these rights.
It does. On what basis?
Because they possess a recognized monetary value. It comes back to that core idea. Value recognized in customary practice in the market?
So if the market treats it as valuable, Sharia can too.
Essentially, yes. And crucially, these intangible rights are considered mal.
Mal.
Wealth. It's the singular form. Later we'll talk about amwal, the plural, meaning all forms of wealth. Because they are mal, they can be legitimately disposed of.
Ah, so they can be bought, sold, assigned.
Exactly. Or you can allow others to use them, like licensing a patent. Think about it. This framework, centuries old, had this inherent concept of value beyond just the physical. It means it wasn't necessarily caught off guard by the digital age or IP in the way some other systems were.
It's actually quite profound. It allows for that economic reality. Okay, so building on ownership itself, what other specific rights kind of branch off from it?
Sure. There's the right of full disposal. Basically, you can do what you want with your property, as long as there's no Shari'ah impediment, of course.
Standard ownership rights, more or less.
Pretty much. Then you have the right of usufruct, intifa.
Usufruct, meaning use.
Right. The right to use the property yourself, or importantly, to lease it out to someone else.
Okay, so use and generate income from it.
Correct. And then there's a narrower version, the right of personal use, which is just what it sounds like.
Limited to just me using it. I can't rent it out.
Exactly. You can use it personally, but not lease it.
Yeah.
So different levels of control there.
That maps out the control aspects clearly. Now, the standard also mentions some specific terms that might sound a bit, well, unfamiliar. Things like shufa and kulu.
Ah, yes. Shufa and kulu. Very practical concepts. Let's take shufa first. That's preemption.
Preemption, like having first dibs.
Kind of, yeah. It's the right of a partner in a real estate property.
So co-owners.
Yes, co-owners. Or sometimes, under very specific conditions, even a neighbor. They get priority to purchase a share if another partner decides to sell it to an outsider.
Why? What's the logic there?
The core idea is to prevent potential harm or friction. Maybe the existing partners don't want this new person involved. It helps maintain stability in the partnership or the community.
Okay, makes sense. Protecting the existing relationship. Is there a catch?
Yes, a very important one. You have to claim this right immediately upon learning about the sale.
Immediately.
Yes. If you delay, you lose the right. It's forfeited. So you need to act fast.
No sleeping on your rights there. Okay, what about the other term, kulu? Sounds like key money sometimes.
It often translates that way, yes. Premises, key money, or sometimes goodwill. It's really relevant in commercial leases.
Commercial properties.
Right. It represents the value tied to a specific location beyond just the basic rent. Maybe the tenant built up a really good business there, or maybe old rent control laws gave the location some inherent extra value.
So it's like paying for the advantage of that specific spot.
Exactly. It's the value embedded in the location or the established lease. Now, the standard is careful about when this is permissible.
Okay, so it's not a free-for-all. What are the valid forms?
Well, a few scenarios. A tenant might pay the landlord an extra sum up front, maybe for a longer lease term or some special privilege. That's often seen as just part of the overall rent, effectively.
Like prepaid rent for a benefit.
Sort of. Or, conversely, the landlord might pay the tenant to leave before the lease is up.
Buying them out of the contract.
Right. And another common one. A new tenant pays the old tenant to take over the remaining lease term. Assign the lease. But again, there are conditions to ensure it's fair and transparent.
So compensating the outgoing tenant for the remaining value of their lease makes sense. Is there a limit to this kulu right?
Absolutely crucial point, yes. These rights are tied directly to the contract duration.
So when the lease runs out?
When the original lease term expires, the tenant cannot demand kulu payment just to vacate. The right effectively evaporates with the end of the original contract.
That's a very clear boundary.
Yeah.
Okay, so we have all these rights, tangible, intangible, personal, real specific ones like shufa and kulu. They're considered wealth, amwal. How are they protected generally? And how can they be disposed of?
The general principle is, because they are amwal, wealth, they can be disposed of through all legitimate means: sale, gift, assignment, transferring the rights.
Standard ways of transferring assets.
Pretty much. But, and this is important, it's not without constraints. It always has to adhere to general Shari'ah principles.
Such as?
Avoiding harm to others is a big one. Preventing the abuse of rights. Ensuring transparency. It's about ethical transactions, not just legal ones. Shari'ah provides strong protections and guarantees for legitimately acquired rights.
Responsibility and ethics go hand in hand with the right itself. Okay. And for protection, is there a particularly practical mechanism people might actually encounter?
Definitely. One very practical tool is the right of retention, hakal habas.
The right of retention. Sounds like holding on to something.
Exactly. If someone owes you money and you happen to be holding something that belongs to that debtor.
Something of theirs is in my possession.
Yes. You generally have the right to retain that item, to hold on to it, until you get paid what you're owed.
Okay, can you give a simple example?
Sure. Think of a tailor who's made a suit for a customer. They can hold on to the finished suit until the customer pays the bill.
Right, makes sense.
Or a landlord, in some situations, might be able to retain a tenant's movable items if rent is significantly overdue. It's a direct mechanism.
Wow, that's quite direct. Almost like a self-help remedy, cutting through potential bureaucracy.
It can be remarkably efficient, yes. A practical way to secure what's due.
Very interesting. Okay, let's bring this right up to date. Are there specific contemporary applications mentioned in the standard, especially thinking about modern finance?
Yes. A good example discussed is priority in stock subscriptions.
Okay, like when a company issues new shares.
Exactly. When a joint stock company decides to increase its capital and issue new shares, the existing shareholders often have a priority right.
A right to buy the new shares first.
Yes, usually in proportion to their existing stake before those shares are offered to the general public.
So it protects their ownership percentage from being diluted too easily.
Correct. And the key point here is that the right to subscribe first itself has value.
Ah, the right itself is an asset.
Precisely. And it can often be assigned or sold to someone else, sometimes with compensation, sometimes without, depending on company rules and local laws.
So you could sell your spot in line, essentially.
Effectively, yes. It's a clear modern example of a financial right being tradable, assignable, even though it's not a physical thing, shows the flexibility again.
It really does. As we talk through this, what's striking is how these principles, even if ancient, seem designed to handle evolving forms of value. So where does this leave us looking forward?
Well, it leads to a really provocative question, doesn't it?
Which is,
How can these same principles based on recognized monetary value en masse be applied to completely new things? Think about digital assets,
yeah,
cryptocurrency.
or even things like the economic value of our personal data.
Exactly. Can this framework, which has shown such flexibility with intangible assets like IP, stretch to cover these new developments? The source material implicitly suggests it might, given its focus on recognized value.
So the big question for you, the listener, to ponder is this jurisprudential framework flexible enough? Can these established ideas of ownership, value, and disposal adapt to assets that live purely in code, or to the value inherent in information itself?
It really pushes us to think about the core principles versus specific applications.
Yeah, it makes you reconsider the adaptability. So just to recap, we've covered a lot today. We started with the definition of a financial right in Shari'ah, that key need for monetary value.
Then the categories: personal versus real rights, haqalaini, and importantly, those intangible rights like IP.
We looked at specific rights like preemption, shufa, and key money, kulu, and how they're regulated.
And how these rights as amwal are protected, mentioning the right of retention, hakalahabas, and how they can be disposed of ethically.
Plus, that contemporary example of stock subscription rights, showing the principles in modern finance. It really paints a picture of a comprehensive yet adaptable system.
Absolutely. It shows its enduring relevance well beyond its historical origins.
So we encourage you to keep thinking about these principles. What do they mean for how we understand wealth and rights in our rapidly changing financial and digital world?
What does asset even mean anymore, and how can we value and protect it? Lots to consider.
Indeed. Thanks for joining us on this deep dive.